Tom Bowley, Chief Market Strategist here at Earnings Beats. Good morning, everybody, and welcome to this Tuesday, November 19th, 2024 edition of Trading Places Live. I'm Tom Bowley, Chief Market Strategist here at Earnings Beats, and it's a pleasure to be with you today. We'll take a look at some things going on. I can tell you that this morning we do have futures down. There's been some increase in the Ukrainian and Russian tensions, and as a result, we've seen the futures drop some. So currently, right now, I'm looking at the diamonds, which track the Dow Jones Industrial Average, down about 1.14%. The SPY, or the S&P 500, down almost 1 full percentage point at 582.56. We closed yesterday at 588.15. The NASDAQ, or the QQQ, that tracks the NASDAQ 100, that also down about 1%, 1.06%. And then finally, the small cap IWM down about 1.25%, down to 226, getting close to what I think is pretty good support. We got a couple of, we got gap support, which could go a little bit lower. We got the 50-day moving average, which is a little bit lower. But this completely goes back to the 226 level, goes back to test the double top that we had on the IWM, looking back to October and then again in July. So definitely gone back and filled some areas of support. This is also in the month of November, not the greatest time of the month. November is by far the strongest month of the year, but we do have this pocket in the middle of the month. We talked about this with our members last week, from about November 12th or 13th through the 20th, which is tomorrow. So all of this is kind of falling in that time frame. We recently had 60-minute negative divergences, talked about that. Also talked about options expiration and how that can carry over into the following week. So I always look, even though options expire, monthly options I'm talking about, even though monthly options expire on the third Friday of every month, a lot of times there's still an effect that goes into the following week. And I always get that question, well, why would that be if options expire on Friday? Why would that have an impact the following week? But remember, if you've got options, if you're holding, say, call options and you decide to exercise them, then the market makers, which are on the other side of your options trade, if you decide to exercise and buy the underlying stock, market makers end up shorting. So you go into the following week and they're still on the other side of the trade, which could lead to some downside action. Trying to figure out exactly how, what the time frame is difficult. But I usually say anywhere up until about the middle of the following week, which would be Wednesday. So I'm not surprised that we continue to drift lower. This is actually really good for our model and aggressive portfolios. We had our draft last night where we decide which equal weighted stocks will be in each of our portfolios, our model, our aggressive, and our income portfolios. That occurs for February 19th, May 19th, August 19th, and November 19th. So today being November 19th, yesterday we had our event to let our members know the stocks that would be in our portfolios beginning at today's close for the next 90 days. So the good news is we're getting the selling on the 19th. So we're actually getting in to much cheaper prices. We have some of the same stocks that we had last quarter that will be also they'll be in our portfolios this quarter. And many of them have gotten much cheaper over the course of the last week or so. We actually exited early last week because we did see the negative divergences. We did know about the middle part of November historically not being the best. And we knew options were going to expire. And that's led to roughly the 18th to the 24th, 19th to the 25th, like right in there, of every month tends to be much weaker than the balance of the month. So you put all that together, and we decided to play it on the safe side. If you actually go into, and I'm going to go ahead and pull a chart up to show you here. But if you go into earnings beats, actually, I've got that set up somewhere here. Yeah, if you go into the earningsbeats.com, just to give you an idea, and scroll down, we have the history of our portfolios that you can click on, pull them up. But you can see this quarter, we've already closed out our model in aggressive, so they won't be changing. It shows as of the close on Friday, but as of the close on Tuesday tonight, they'll be the same when we update. But the S&P 500 this quarter will change. So we've already got a 16 percentage point lead in our model portfolio and 21% lead in our aggressive portfolio, and that's before we saw another drop of 1% in the S&P this morning. So if anything, it looks like maybe we'll just outperform by a little bit more this quarter. And then starting today, we will be entering back into our portfolio stocks at the close today. Of course, members, you're more than welcome to do whatever you want. You don't have to trade the stocks. You can trade them. You can buy them all. I mean, that's completely up to you. I always say we're not registered investment advisors. We don't provide advice. We don't provide recommendations. What we provide is education. And if you decide, all we do, we follow it, we track it so that we can say, hey, this is the way that we would consider trading the market. If you didn't want to trade daily or, weekly, you didn't want to swing trade, you just, you got a job, you're at work. We had this question come up many years ago, and that's what led to these portfolios. But a lot of folks are at work, don't have time to trade, but they still want to take advantage of relative strength and a lot of things that we talk about. And so that's where the model aggressive and income portfolios were born out of that. But our model portfolio, since we started, this has now been 6 years today, model portfolio up 254%. The S&P 500 over the same time period up 118%. So more than double in our model portfolio by simply redrafting every 90 days and putting what we believe are it's usually 10 equal weighted stocks. So 10 stocks going in at 10% each. And we just find the best stocks that are out there and put them in our portfolios and see how they do over 90 days. But we call it the draft because it's kind of like being an NFL general manager, when you're on the clock and you have to pick a player. Well, in this case, we got the top 10 picks in the draft, which, should lead to some outperformance if we do a good job of picking, we do our homework. I mean, imagine that in the NFL, if you had the top 10 picks, you ought to be able to build out a pretty good team, especially if you did that, every year for about 10 years. So anyway, that's kind of the whole philosophy behind what we do. If you want to come on board and take a look at what we do and check out our portfolio stocks for the next 90 days, you can come in right now, go to our homepage, earningsbeats.com, click on that start your no-cost trial. And we'll remind you before your 30 days is up. We're not going to charge you if you don't want the service. But it is an opportunity to go in, check us out, check out the portfolio stocks. You might find some really good trades in there. That's normally what I do with the portfolios is I trade them. They're 30 of my favorite stocks. So as they hit key support levels, I trade them. Anyway, let's move on, or move back, I should say, to what happened yesterday. So we got the Dow Jones Industrial finishing down 55 points. That was down just a little over 0.1%. S&P 500 rose 23. That was up about 0.4%. NASDAQ 100 up 0.7%. That was 145 points, up to that 20,500 level. Mid caps gaining 6 points. That was about 0.2%. IWM gained 45 cents, which was about 0.2%. Transports, though, actually fell 0.48% yesterday, down 83 points back to 17,144. But the good news is, even though we're pulling back, we are pulling back within uptrends. So I suspect that we're going to see things turn back to the upside again. But will it be today? Will it be tomorrow? Will it be next week? I mean, that's obviously what we're going to find out. But we are getting down to some key 20-day moving averages and maybe even gap support levels and things like that that should help us. Looking at the sectors, energy yesterday performed the best. You can see 10 of the 11 sectors were up. The one that was down was industrials, and that's why we saw a little underperformance in the Dow Jones. Industrials didn't perform well as a result, struggled a little bit there. Healthcare, financials, some of the areas that are a little bit more heavily weighted in the Dow Jones really didn't see much leadership, or we didn't see any leadership from those groups. So that's kind of where we stand right now. Energy up 1.33% yesterday. Communication services up about 1%. Discretionary, again, outperforming. Staples, I'll show you a chart on that in just a little bit. But overall, pretty good action yesterday, but still within this short-term downtrend. And it looks like I said at the open, looks like it's going to continue at this point based on that the increasing fears over the Russian-Ukrainian conflict. All right, we move on. Let's take a look. I wanted to show you a couple of things, how you can find strong industry groups over at Stock Charts. I always just show them to you, but I never really show you how you can maneuver around Stock Charts to do it. So I thought this would be a good opportunity to do that. So over here under member tools, if you're a member, you come to what's called the dashboard. And then over here, I've got it set up so my member tools are on the upper left. And then if you scroll down, you'll see sector summary. This all comes under summary pages. So scroll down till you get summary pages. And then under that, you'll see sector summary, market summary, and here's industry summary. So what you could do is click on industry summary. And this shows us all the industry groups, and it shows us based on chart view. So whichever industry group I click on, I can see a little mini chart over here. So then I can move to broadcasting and entertainment. Look at that. Here's internet. If you're interested in internet, been in a nice uptrend, got a double top, pulling back. You might call it an uptrend with a cup, little handle. Either way, looks pretty bullish here on this pullback. But I could go through any of the 104 industry groups and pull up that, doing it this way. And then I could scroll down if I wanted a different group like discretionary. Here are all the individual industry groups within the discretionary area and so forth and so on. The other option is to click on table view, which is what I normally do. I'm just a creature of habit. This is what I always have done in the past. But here within the communication services group, I think it, for me anyway, I'm a numbers person. I like seeing the numbers and the percentages. You can also quickly look over here at the scooter, see what that's the Stock Charts technical rank. So you get an idea of what's been working most recently. Fixed line communications, 95 scooter. Then you've got broadcasting and entertainment, 83. So these have been areas that have been outperforming over the past few months. But I could go right down the list and look at it. Now, one other thing I can do is, let me just pull up the S&P. I want to show you a chart list I have. So one of the things that we do for our members, our annual members at Earnings Beats, is we have a relative strength industry group chart list. So what that does is we've set it up so that all of the technology industry groups come up first. So everything is 001 for technology. That's how we, maybe I can pull this up in edit form or a summary form. This might be better to show you. So here is the name. So 001 technology, everything's 001 technology. And then I've got the 8 industry groups numbered 001, 002, 003. So that's how it's broken down. The reason I do that is when they all get mixed up, I can quickly see the industry group and know exactly the sector. I mean, I pretty much know them anyway, but this is a way that members, maybe who aren't as familiar with these industry groups, can see immediately what's leading and what's not as far as industry groups within the various sectors. So for instance, let's sort this. Sector and industry group don't really matter. Get rid of those 2 columns. Don't need market cap, scooter, none of that. So anyway, here are all of the industry groups. So the first 8 are all technology industry groups. So I can quickly look at yesterday and see, okay, renewable energy did pretty well. Computer hardware did pretty well, but the rest were down. So, but this is on a relative basis, remember. So this is relative to the S&P 500. So for instance, DJUSEC electrical components, you could have this showing a minus, but it could still be up. So it's underperforming the S&P, but it's still up for the day. But what this is showing us is relative performance. So if I click on this percentage change, I can then pull up the actual industry groups that were the best industry groups yesterday. So autos, number 1, of course, Tesla had a good day. Moving to the energy area, coal. Then we had materials, had both the mining, gold mining and mining. Then we're renewable energy back in technology, non-ferrous metals and materials. Anyway, you can kind of get a feel. Here's another energy. We saw energy was leading. So it's not surprising to see a few of these energy industry groups in the top 10, 15 industry groups. And so what you can do is you could say, okay, well, all of a sudden, I've got the exploration and production doing well. So if I click on that, what this gives me is a chart of the industry group relative to the S&P 500. So this one's steadily been going down. Yesterday was a good day, but this has been in a downtrend now for the last 2 years. This goes all the way back to the end of 2022. So this isn't a good group, and this is probably not going to excite me too much because it's all it's doing is just getting back to the downtrending 20-week EMA of this relative performance. So not great there. Let's look at one. Let me pull up maybe what wasn't working yesterday. Probably saw a little profit taking. See if I can find a good group in here. Looking, there were no financials. Well, here's a financial. Mortgage finance, not the best. I was looking maybe for banks. Just bear with me while I look at this. Well, here's semiconductors. If you pull up semiconductors, you can see over the past couple of years, this group's been very strong, but it's been weak since early June. So that was when actually I wrote an article, I think, over at Stock Charts in my Trading Places blog. And you can see those just by clicking on the articles. But anyway, if you go back in the archive on my blog, I think it was June 22nd, I wrote an article about the semiconductors saying they were toast for a while. They had a huge reversing candle after a massive uptrend. So it was going to take a little while for this group to kind of consolidate all the gains that it had seen before perhaps moving back up again. But you can see it's been a while now, more than 5 months, or maybe right about 5 months from that top in June on the 22nd to where we are now, November 19th. And so on a relative basis, you can see that semiconductors have been coming down for a month. So this has been an area that's been more disappointing than anything else. But eventually we'll make another push to the upside, but who knows how long we consolidate first. I'd be very excited if the group broke out on a relative basis, but you can see clearly we got a lot of work to do there. So anyway, that's just another way to kind of look at all of the action and looking at specifically the industry groups. We can go into that, go back to that your dashboard, and we can check it out that way, where we go down again, down under the summary pages, click on that industry summary group. Here's the chart view. Here's the table view. And there's fixed line communications. If we find there's automobiles up 4.93. If we go down this list, there's not going to be another group that's higher than 4.93, which is why on a relative basis, that chart list I showed you, autos were number one. If we go down to materials, right here, mining and gold mining, 369, 369. So those were in the number 3 and 4 spots. Anyhow, like I said, different ways to look at it. Just depends on how you like to look at it. For me, I think pulling up that chart list is really quick and easy to see exactly relative. Here, I've got to kind of look. I got to go through, and it's like, okay, automobiles up 493, but is that the best group? I don't know unless I go through every one of these and look. There's coal 415. But again, using that chart list, it's very simple. It's all laid out for you in order. Or you can have it in name order. So you have all the technology groups together, all discretionary groups together. And then you can kind of see what areas within those sectors are not or were not performing well, which is more set up kind of like this page. Anyhow, let's keep moving on. 10-year Treasury yield, get an update here. Right now, we're sitting at 4.36%. That is down 5.3 basis points. So going back, maybe testing, getting ready to test that rising 20-day EMA, clearly in a short-term uptrend. Nothing's changed. We do have that PPO starting to roll over a little bit, though, on the most recent high. So perhaps, maybe, we'll see a little bit more weakness, perhaps down to that rising 50-day SMA. S&P 500, looking at the chart here, you can see we've come back down to gap support. I'm going to shorten this period just a little bit. So we'll do 6 months and annotate. And so if I just draw a line right there, because there's that gap. That's where we gapped up. So we got gap support there. Here's the bottom of gap support. There was a breakout from this top from July back in September, came back down, kind of tested that area. So those are three key areas of support that I would be looking at. And when we pull this up, you can see first area of support so far is holding. But again, in 10 minutes, we're going to be opening. And let me see. I'll give you the updated futures, see if they're still dropping. Or if they've come back. All right, let's check out the diamonds. So they were all down roughly 1%, maybe a little bit more on the small caps. Diamonds right now down less than 1%, 9/10. So they've come back just a little bit, looks like. Spider down, actually 2/3 of 1%. Spider was up over 1%. So we have seen the market come back a little bit from those lows. QQQ down a little more than 0.6 of 1%. And the IWM down about 1%. So still IWM lagging this morning, but we were down to 226. Now we're at 226.47. So a little bit of recovery off of those earlier futures, which were down a bit more. But anyway, S&P 500, this is the first key area of support. So we're sitting at 58.93. If we're down 2/3 of 1%, that would be roughly about 40 points, which would take us down to about 58.53 at the open, which would be a little bit below that support area, I believe. Let's use the inspector here. Gap support, 58.64. So right now, we got 10 minutes to go, but right now, based on where the S&P is, it looks like we might open just a little bit below this gap support level. So, and then the low that we saw recently was 58.53. That was back on Friday. So that's it's going to be interesting open to see whether or not we sell off from there. My guess is if we're going to sell off, if we're going to go below the 20-day and we open below gap support, I would expect maybe we'll see a little bit more selling today. Maybe a lot more selling, who knows? But I would be watching for a reversal. Like I said, we're getting close to the end of this period in November, which tends to be a little weaker. And we're about ready to go into a part of November that is much, much stronger as we go toward the end of the month. Over the holidays tend to be very strong. So I'd be looking at this maybe, kind of looking at it with kind of licking my chops here a little bit as market pulls back a little bit more. Could be setting up really nice opportunity going into the end of the month. If, in fact, the historical bullish bias kicks back in here in a couple days. NASDAQ 100, we've already lost that gap support, the top of gap support. So now it's the bottom of gap support, closer to the 2250 level that I'd watch there. IWM, big gap up, went back up, set up an all-time high a week ago, and then we've seen some selling down to the 20-day with the futures down about 1%. That's going to take us down to that 226 and change area, which isn't far from gap support at 224.23. And then you've got the 50-day moving average, which is at 222. So that's kind of an area or a range that I'd be looking at as a possible reversal on the IWM. Transports, big breakout recently. You can see all the sideways consolidation. Huge bullish candle, got that breakout. Moving back down to the 20-day would certainly not be that big of an issue. That's at 16,900. Then we've got two gap support levels to watch a little bit below that. So we do have a little bit of downside action here. Maybe anywhere from maybe 2-3% is what I would look for from here before I would maybe expect a reversal. And we might not go down there. I'm just saying that those are some key support levels that prices could gravitate down toward. All right, one chart I wanted to show you here. This is the S&P 500 again. I don't really want to talk about the S&P, but what I did put on here were some of the sustainability ratios I like to follow. So the QQQ, SPY, QQQ has been outperforming a little bit over the last couple months. You can see there's a tendency for the S&P 500 in the fourth quarter to outperform simply because financials do much better. Industrials do much better. Financials really are almost their representation in the NASDAQ 100 is essentially negligible. There's a few stocks that kind of are hybrids that are included, but basically the NASDAQ 100 is a non-financial index. So financials have been the strongest area in the market in the fourth quarter. So it kind of makes sense that the QQQ is going to struggle against the S&P because the QQQ doesn't have much financial representation, whereas on the SPDR, financials are the number 2 sector. So anytime the financials are going, it's going to give a leg up to the S&P 500. Or I should say when financials are going up on a relative basis. Anyhow, that is going up though, which is still a good sign. This XLY, excuse me, XLP, this ratio is taken off to the upside. If you know anything about these ratios, in my opinion, this is one of the strongest ratios to watch. It is very, very positively correlated to the S&P 500. The direction of this ratio and the direction of the S&P 500 are very highly positively correlated over the long term. So make no mistake about it. When the XLY, XLP ratio is going up, I'm going to be very hard pressed to be bearish because it's telling us money is rotating in more bullish fashion. It's more risk on. Those are the types of things that lead to secular bull market advances. So I love that. Down here is large cap growth to large cap value. Again, very similar to what's going on with QQQ and the SPDR, and for similar reasons, but still going up after pulling back significantly back in July. We've mostly been going higher to the upside, which is good, trending up. I think once we get past the fourth quarter and go into the beginning of next year, I think you'll see the large cap growth really start to pick back up again. All right, let's take a look at our website, earningsbeats.com. Again, went there a little bit earlier, but if you are interested and you want to sign up and find out the stocks we just put in our portfolios, folks, we absolutely crushed the portfolio performance or crushed the S&P 500 with our portfolio performance last quarter. Again, if you came in a little late, just show you very briefly our historical performance. We've already closed out these portfolios for this quarter. So model is set at 20.89%, aggressive 25.75%. That's just performance for one quarter. And this is what the S&P 500 has done during the same period. And just remember, when I talk about quarter, you got to look down here because it's not calendar quarter. In this case, it's August 19th, November 19th quarter. So it doesn't line up with calendar quarter. But you can see the performance has just been awesome. So anyway, we go back. We just drafted for the next quarter, which begins at the close today, and a 30-day free trial. You can come in and look at all of our portfolios. You can look at all of our chart list, kick the tires on our service for the next 30 days. I think you're going to enjoy it. I think I know most of our members absolutely love our service. Nearly every member is an annual member to get that savings. Anyway, check it out. If you don't like the service, you're not going to hurt my feelings. I know different strategies, different services may be set up differently for folks, but we do a lot of research, a lot of education, a lot of guidance we provide, which I think has kept a lot of our members out of harm's way for the past several years, especially when we've had those rough periods, the pandemic, middle of the pandemic. I said, stick with the market. It's a healthcare crisis, not a financial crisis. Market came right back from that and then predicted the cyclical bear market of 2022 before it occurred, and then picked the bottom in the middle of June when it did bottom for the first time before we went just slightly lower in October. But anyway, the guidance has been right on. Check the service out for yourself, see what you think. But you can do that at earningsbeats.com. I wanted to show you a stock that made a pretty big move in the scooters in the large cap area yesterday. And this was DraftKings. I've been watching DraftKings simply because it seems like when the market gets much more aggressive, this is a stock that tends to do well. And it had started to strengthen when everything got more aggressive at the beginning of the month and after the election was over. This was one of those stocks that made a run, pulled back, hit that rising 20-day moving average, and yesterday bounced really nicely off of it, gaining 6%. A move to another high with volume coming in would be bullish here on DraftKings. So I just wanted to point this out as a chart of the day. Now, the last thing I wanted to do is we had a member question come in, and I wanted to just talk about that for a second. Somebody that's fairly new to trading says June 24th. Discovered us a couple months ago. Trade options and buy a few equities. Learned a lot about the XLF, IWM, IBT, and a few other ETFs, but is wondering if there is an ETF for small banks, brewers, or airlines. Well, first, Brewers did really well recently. I'm not a huge fan of Brewers long term because they are in the Staples area. I'm not aware of any ETF for Brewers by themselves. Obviously, there's a lot of ETFs within the Staples group as a whole, which may have some Brewers in it, but I'm not aware. That doesn't mean there's not one out there because there are a ton of ETFs out there. But I'm not aware of one. I'd have to probably do a little more research now that we've gotten through the draft. I might have a little bit more time to check on that for you. As far as airlines, there's Jets. So let me show you with that one, JETS. This is US Global Jets ETF. I don't think it's just airlines. There could be some aerospace companies in there. I want to say like Boeing. You could go to a Yahoo Finance or maybe go to Fidelity or Schwab or any of those and look at the components on ETFs to see exactly what you own. Don't just assume that, oh, this says Jets and it's Global Jets. That must mean airlines. May not be airlines. Airlines might be 40% of it. It could be a bunch of aerospace and other types of companies. So I always say you got to know what you own. So anyway, Jets, as far as financials, there's probably some out there for the very small banks, but the one I like is KRE, which is the regional banking ETF. So you're going to get some, larger mid-cap kind of names in there, but there'll be some small caps in there as well. But these are more regional banks as opposed to your money central banks like JP Morgan and Citigroup and Wells Fargo and those names. So I like this group because I think they're going to do well if that interest rate spread continues to grow, which I think it will over the next few months. So KRE, I think, is going to be a strong relative performer. Anyway, those are some just to kind of help you out a little bit. Hopefully that gives you a little bit more information. I think there may have been one that just came in. Well, they're asking about a healthcare software stock with a big cup base that might be breaking out. I love the piece, but can't find it. Could you please tell me the stock and where I wrote about it? Trying to think. Healthcare software. Gosh, I write and talk about so many stocks. Let me think about that, and I'll try to get back to you on that one later today or maybe on the next show. It's not hitting me right now. I mean, it could be in one of my blog articles. Let me look around and see if I can come up with the stock, and I'll get back to you on that one. But anyhow, that is it. So right now we got, let's take a look, see what's going on. Market just opened here 3 minutes ago. Dow's down 0.75%, S&P 0.5%, NASDAQ 100 0.5%, small caps down under 1%. So they seem to be coming back a little bit. The first symbol you see there on the S&P 500, SMCI, apparently they have hired another auditor. So at least that gets rid of one uncertainty for the company. Obviously, the market liked it. Still, it's in a massive downtrend. This one is it's really hard to say because you don't know what the new accounting firm is going to come up with. Obviously, they've probably spoken to the old accounting firm. I was in public accounting, so I kind of have a firsthand knowledge how some of this might work. So they've probably spoken to the other accountants. Either maybe SMCI management has agreed to change the way they're doing some things, or maybe this accounting firm has become okay with what they need to change. I don't know. I don't know how it's all unfolded, but they did hire a new CPA firm, and as a result, the market is somewhat relieved. But we'll see whether or not those gains stick or not. This is a really tough one. This one literally is like going into a casino and putting your money on red or black at the roulette table. I don't know. I don't really have a strong opinion one way or the other on SMCI. I need to see it calm down and start moving on fundamentals. And I don't think that's what it's moving on right now. It's moving on fear and greed. And so I would personally, I can't really manage my risk with all the gap ups and gap downs. So I don't trade stocks like that. But anyway, wanted to mention it. All right, that's it. So I'll be back on Thursday to do my next video, which will be over at stockcharts.com. So make sure you check that out. But right here at Earnings Beats, be sure to hit that like button and subscribe to our channel. We're trying to really build a community up here on YouTube. So we certainly would appreciate you doing that for us. Have a great day, everybody, and happy trading.